channel. Please, before we get into the video, make sure you guys do me a favor, subscribe to my channel and like this video. So today we have our midweek recap. We are going to be talking about the S&P 500, the stock Qualcomm, which I am looking at as a play, as well as the crude oil futures, as well as the dollar, the Dixie, as some call it. Okay, so moving on to it. It is Tuesday night, the night after CPI. We have PPI released in the morning, and we had a large risk-off day here in the S&P 500. So if you guys remember from the previous video, I talked about this kind of, this almost rising wedge that it's forming, and right, we're forming it after we put in a Head and Shoulders top, right? So we are in a downtrend. The Head and Shoulders is the trend change. Right, so now technically we're in this downtrend, so we're looking at this flag, right, and the price is working in this flag. We rejected the supply hard, this 410, 411 area. Now we're back at the trend line, so now this is where it gets interesting, right? Where do we go from here? So moving on into a 1 hour chart. So you can see I have this trend line drawn from the June 16th, June 17th lows, and we're sitting right on it. So what you should be watching for is a break below this level, this low that we put in last week. This was this 388-ish level, right? So what you want to see is a break below this. So if we, even start, and think about it like this, if we do get below this, this is going to be a bearish weekly engulfing candle, right? You can see how it's setting up right now. You see that? See how it's almost already engulfing it in the bottom of last week, that 388 level, that would be the engulfing level. No, it's a Tuesday now, so we still have 3 trading days left this week, and look at the volume already. See this down here? It's already almost more volume than the prior week, which leads me to believe that continuation to the downside seems likely. Okay, I wouldn't be surprised if we did get one sort of consolidation-ish day. Something that could reset technicals a little bit, because we had a very extended move down. I'd be watching for a bounce back towards this 398 level where we were consolidating, 398, 400, somewhere around there, right? And I'd be looking for a little bit of sideways action probably into Wednesday, and then maybe by later day Thursday. Or if we open on a little gap up on Thursday, then I could see us trading lower from there. But what I want is a little bit of a technical cool down, right? So we're way up. We were overbought, and we already almost moved down to oversold. So I'd like to work back towards the middle a little bit. If we can get back up into the high 40s tomorrow and the next day, then I think Friday we could flush it out. So I'm going to be watching this trend line. I'll pull up a 4-hour chart. I'm going to be watching this trend line. I will say I do have a setup that's very similar to this in my A plus setup folder. So I've seen this pattern play out a lot. How I like to play it, this is a 4-hour chart. You pick your time frame, wait for the candle to break below this level, and then once a candle, let's say you're playing off the hourly. So let's say that it prints below now this trend line, and it's sitting down here near 388, and it makes a new low at 387. Then from there you would play the break on that candle's low. That's your confirmation, right? And you just risk above that candle. That's how I like to play these wedges. So that's what I'll be looking for. Moving on to Qualcomm, especially if we get continuation, which it looks like we are going to get out of the S&P 500, I am going to be watching the Qualcomm for a short back towards 100, right? I'm going to be looking at the 100 Ps. I'm also going to be looking at the 110 Ps, and I'm going to be looking to trade those. So this is the weekly chart. We have this trend line right here is what I'm watching. So delete this. So we have this trend line right here. We got 3 touches, and what I'm looking for is, so actually the pattern was quite similar here. You see it pushed up, consolidates, then made new highs, then, some distribution, and then it sold off and made new, recent lows, right? So I'm going to look to catch that flush. I think it could flush. I think 110 is going to be support. But I do think if the market continues lower, this thing sees below 100. So, and this, what we're really looking for is the prior COVID highs. This is the key, right? So this is the level right here. So it's $90.92. A lot of sectors have retraced. I know I've talked about this, have retraced all the way down to COVID highs. What hasn't? Semiconductors. I believe, and they are cyclical, right? A lot of people think semis are growth stocks. They're not growth stocks, they're cyclical. When the economy is good, they do great. When the economy is struggling, they do poorly and they lead to the downside. That hasn't changed. It's still like that, right? So I'm watching for this break, and I will be looking to swing calls, 60 plus days out. This is a weekly chart that I'm looking at, but I really am looking for that $100 target. And when you starts to get below that, then I think the edge starts to fade back towards the buyers. So long term, that might be a good spot to be looking at. That's about $90.50. And it probably flushes a little bit below that into the 86-ish level. So that's what I'm looking for. Okay, right? So this is the daily. You can see where we're at. Pull up the 1 hour. And on stuff like this, I just like to risk off the key supply levels above. So right here, this whole node is going to be a key supply. So I would really just risk above that, or that would, AKA would be today's high, which would be 130. So, if I'm getting long here I'd like to get long at 125 in reality. 125, risk $5 to make 25. Right? 25 would be 100. Anything more than that. So, that's a 5-to-1 risk reward. Anything more, 6, 7 are. Contracts on that would move, I was looking at the 100p. Those contracts right now are trading at about $100. Those contracts, if they went in the money, would be trading around 900. Right, so it's about a $800 a contract roughly from a $100 risk. So that's what I'm looking at there. Qualcomm, that's something I'm interested in. Moving on to oil. We had the Biden administration came out today, said they're looking to buy oil, fill up the reserves back towards $80, which if you look at this chart, what is $80, right? So $80 is about, it's in between these two lines, right? So this was a prior high, so this is going to be a key level. This level is 77, 76 bucks. I would expect oil to base and find a bottom around there, especially if you start to see, you literally have almost like the government coming in to put a floor almost, which is, I would argue, is going to end up being inflationary. But if there is an economic slowdown, then oil eventually will work its way back lower. But so that's what I'm seeing for crude. I am still bullish on crude. I think it will hit these levels above. I think it probably is going to be $120 a barrel within the next couple of years. And I think it's most likely only going to continue higher. Now, if the slowdown in the economy is really bad, then that, could be delayed. But I do think that'd be a dip worth buying. Moving on to the Dixie, which had a strong day today. You can see this candle right here, right? Big bullish candle. So that's what we had today. Let's pull up a month or a weekly chart. You see it's been going higher. You see this? It's been going high. This is pretty remarkable. It's been going higher, but it's been cooling off from a technical perspective, which leads me to believe that it could still push. It still could push higher. So let's pull up the monthly chart. We are getting in overbought. You see we're at this trend line right now. And it's hard to say what happens from here, right? Is it going to break out? is it gonna push up into 120? I don't know. I mean, it's really hard to say. Forex is not my specialty. It's not something I'm really good at, but you do need to watch the dollar. It's important. If the dollar's strong, stocks generally don't like that. So that's what I'm seeing, guys, in the markets. Thanks for watching this video. Thanks for viewing, subscribing, and as always, I'll be back with more videos. Peace.